Hello everyone. My greetings to each one of you. This is the sixth session on rural development. In the previous session, you have learnt about the problems faced by the cooperatives so far as rural credit is concerned. I am Poonam Vohra from Idiot Economics Learning Center. This session focuses on measures adopted to smoothen the flow of credit among rural masses. So let's understand these measures. Persistent issues in rural credit have been regional disparities, interpersonal inequity, poor loan recovery, poor health of rural financial institutions, making them ineligible for refinance from NABARD. So in order to improve the flow of credit to agriculture, the government has introduced various measures. It includes that procedures have been simplified for credit delivery. More power has been delegated to branch managers to raise the credit flow to agriculture. Cash credit facility has been introduced. New loan products have been introduced with saving components in it. Cash disbursement of loans, dispensation of no due certificate and discretion to banks on matters relating to margin security requirements for agricultural loan above 10,000 are some of the important features of the new loan products. Then there has been an introduction of at least one specialized agricultural bank in each state to cater to the needs of high tech, due to which there has been an increase in the flow of institutional credit from around 31,000 crores in 97-98 to approximately 7,36,000 crores during the 10th plan. Then arrangements have also been made for hassle-free settlements of disputes relating to overdues. Then farm credit package was announced, which aimed at doubling the flow of institutional credit for agriculture. There has also been an introduction of debt waiver scheme for small and marginal farmers to the extent of rupees 50,000 crores of loans overdue from commercial banks, regional rural banks and cooperative credit institutions. Not only that, one-time debt relief scheme was also introduced at the rate of 25% for large farmers to the extent of 10,000 crores. However, the farm loan for waiver scheme has also been criticized because of the full waiver of loan only applies to loans taken by farmers from commercial banks owning 2 hectares or less, but completely ignores the distress of other farmers who have taken loan from private money lenders. So it has been observed that loan waiver policy did not give much relief to the poor farmers. Thus it is felt that the country's agricultural policy needs to be redressed thoroughly. As it has been felt that country's agricultural policy needs to be redressed thoroughly, so the recent measures taken for providing credit facility to farmers include: one is Kisan Credit Cards scheme has been launched with the aim to provide short-term formal credit to farmers. Owner cultivators, tenant farmers can avail loans to meet their agricultural needs under this scheme at very attractive rates of interest. Repayment has also been simplified and dependent on the harvesting season, including the farmer's debt burden. Then there has been investment loan facility which is made available to the farmers for irrigation, for agricultural mechanization, for land development, plantation, horticulture and for post-harvest management. Then third is the interest subvention scheme for farmers have been introduced, which aims at providing short-term credit to farmers at the subsidized interest rate. It will be given to public sector banks, private sector banks, cooperative banks and regional rural banks on use of own funds and to NABARD for refinancing to regional rural banks and cooperative banks. This scheme is implemented by NABARD and RBI. Then a Ministry of Cooperation has been formed which will work to streamline the processes for ease of doing business for cooperatives and enable development of multi-state cooperatives. Next is amendments have been made to the Banking Regulation Act of 1949. This was promulgated to bring additional areas of functioning of cooperative banks under the regulatory purview of RBI. The major provisions of amendment pertain to areas like governance and management of cooperative banks, prior approval of RBI for appointment or removal of statutory auditors, time allowed for disposal of non-banking assets, additional avenues for raising capital, and voluntary or compulsory amalgamation. All these aspects were attracting a lot of attention as these were the major weak areas. Then also there has been an amalgamation of regional rural banks which were 196 to now 45, and it has been stated as regional rural banks, one state, one regional rural bank in smaller states, and there will be reduction in the number of larger states too. Then last is NABARD will monitor the functioning and performance of regional rural banks as well as rural cooperative banks through the returns that they file and their financial statements that they submit. So these changes will definitely have their impact on the credit flow to agricultural farmers. I hope you have understood some of the measures adopted so that credit flow among the rural masses can be improved. With this, the session comes to an end. The next session focuses on the problems faced by the farmers so far as agricultural marketing is concerned. Till then, keep reading, keep learning and keep updating yourself.